always try to relive our past glory days, right? One of the things that I've learned is that bear market rallies there's a term for it, and it's called rip your face off rally. It's like so intense. And I've been pretty, even in spite of so many people bullish, I've had to just stick to what the charts are telling me. Again, you have to kind of keep it in perspective versus, I know everyone wants to get excited that Bitcoin's headed to 100,000 or higher. But right now, it again just appears to be that bear market rally. I'm still in the camp that we see 12 to 13, maybe even before we really bottom out. So there's no doubt that they're starting to kind of come to the end of their rate hike cycle. But I think what investors may be misreading right now is not hiking rates doesn't mean lowering rates. And I think that's one of these things where we've seen quite the rally, and we saw in cryptocurrencies recently, in the stock market, as the Fed was kind of coming to the end of this. We obviously know Jerome Powell recently said basically that, and the markets ripped to the upside. But I think at this point, smart money, I'm seeing a lot of distribution from big institutional sellers. It seems like they're using this to unload into the retail crowd, and that should be a concern for every retail investor. So one of the things, and this is a psychological aspect of trading, is that we always try to relive our past glory days, right? So when we think about what we've seen recently, we've seen some of these altcoins rip up 100%. We've seen Bitcoin take off, people getting so bullish so quickly, even though if you look at where the chart was on Bitcoin at 69,000, a bounce to 24 is not really that big of a move in comparison. And then you look at some of these stocks that have run. I mean, Coinbase ran up from like $30 to $85 in a few weeks. I mean, just an incredible move. We've seen Tesla stock go parabolic recently. And what's going on here is as we've gotten this January bounce in the market, a lot of retail investors have gotten very bullish, thinking it's going to be a repeat of 2021. The problem is we have different things, right? So in 2021, interest rates were zero, the Fed was printing money, and the government was sending checks out to most Americans. Now we have 2023, interest rates are 5%, which again, remember, sucks money out of the system. There's no quantitative easing, and the government obviously is not sending checks out. So I think investors have to be very, very careful here. I've seen many bear market rallies. This has all the earmarks of another bear market rally. One of the things that I've learned is that bear market rallies there's a term for it, and it's called rip your face off rally. It's like so intense. And that's the way bear markets are. You have these reflex rallies that are really intense and unbelievable. And they really pull at your emotions to make you want to go bullish. And you just see things keep going up and up and up. But again, you just have to step back and look at the bigger picture. And if you go to the weekly charts, the monthly charts, this does have the earmarks of basically run-of-your-mill past bear market rallies. I'm kind of stuck between a rock and a hard place here, because I think that you will get a significant bounce off of that. But I also think that we have to have a reversion to the mean, right? So again, we've had this market where we've been in this bull market that you could argue is artificially inflated because of Fed printing of money. And they finally stopped printing. So we're starting to revert back to the mean. And we have this longer green trend line that actually goes all the way back to 2009. And you can see it basically hits every low. The only time we pierced it was in the panic of COVID, because we were literally, there were people there that thinking the world was going to end. So it was massive panic. But that would be kind of my ultimate target on the downside for this cycle, at least in this period over the next 12 months. So I do think after we bounce off this 3,400, you probably have one more flush down to about 3,000. And I think the key is to keep in mind is that if the Fed is really going hard nose on inflation, then it makes a lot of sense that we have to come back to where the trend line was that is kind of the longer term trend of the market. Even though that market did have the QE in it, we've still got to come at least touch that trend at 3,000 on the S&P. And I've been pretty, even in spite of so many people bullish, I've had to just stick to what the charts are telling me. And again, it's been a great rally. It looks monstrous, but what I mentioned in the beginning when we started talking was if you zoom out on the chart, we have to take it into account, right? So here's your big M top, and this was the recent rally. Now, interestingly enough, if we look at this low here in June to the high in August, that's almost the same distance as from here to here. So again, you have to kind of keep it in perspective versus, I know everyone wants to get excited that Bitcoin's headed to 100,000 or higher, but right now it again just appears to be that bear market rally. In addition, there was a classic top signal here on Bitcoin. This is called the topping tail. And this was put in right here. As soon as that happened, that's a note to investors that you're likely going to see a fall. And that's exactly what we've seen. We've seen Bitcoin starting to come back in. Now, I'll give you the technical support levels. Now, I think eventually we break all of these to the downside. But right now, this would be your next support right around 21,300. This is that pre-FFTX collapse where we came up to it and we pulled back, then we broke through. And then if that gets taken out to the downside, you have this beautiful trend line, the midpoint of here with these lows over here. So these would be your next two downside supports. Ultimately, I'm still in the camp that we see 12 to 13, maybe even 9,000 before we really bottom out. And it's hard to imagine somehow, a risk asset like Bitcoin currently is not seeing a drop back down to 12 or 13,000, maybe even sub 10. So, I mean, you have the side where you have risk assets, like let's say the economy spins into a recession. The Fed, maybe inflation is still too high for them to actually cut rates versus going to neutral. That's also going to be a tricky thing for the stock market. That then a stock market sell-off is negative for crypto assets in general. And then you obviously have this regulation stuff, which again, this is stuff that it's going to make investors in crypto uncomfortable, right? I mean, we don't know the end game. We don't know the rules yet of what's a security, what's a commodity. And so all of these type of things absolutely will throw that extra bit of uncertainty into a crypto market. And very easily you could see a dump out. So one of the things that I do, and this is just being super honest with the public, is that, even though I think it's going to 12 to 13, maybe 9, it's not like I'm waiting with my cash to buy at 9, right? I'm smart enough to know that I'm not smart, meaning that I don't know the exact low. And so what that means is that when it was in the 17 range, I picked up a 1/6 position, meaning that it was 1/6 of the bag that I want to accumulate on Bitcoin. And basically what I said to myself is every 2,000 to 3,000 down, I'm going to just add another 1/6 until I have a full 6/6 position, right? And so I think that's kind of where I am right now, is that ultimately I do expect potentially to go as low as 9, but I don't want to be left with nothing in the Bitcoin bag if it doesn't get there. And so that's really where dollar cost averaging. I mean, once you get down in the sub 20,000 level, you're now really close to the lows. I mean, even if it goes to 9 from 15 and change, which was the low, that's in the scheme of being at 69,000 all the way down to here. It's not that big of a move anymore. So I think investors, I always say that because I don't want investors to just be like, oh, I'm only buying at 9,000 or 10,000. Right. You kind of have to start to say, what's my long-term thesis on Bitcoin? Is it bullish? And if so, then you just basically have a game plan as it comes down and you execute that game plan. In fact, I do think that there's a good chance we bottom out in 2023. I don't know how much upside we'll get in 2024. Depends on what the regulations are, obviously, and stuff like that. But I do think there's going to be a pivot in Bitcoin specifically where investors will start viewing it as a safe haven versus a risk asset. And I think that finally comes in. My guess is when stocks become very unattractive because we get in a long-term bear market, if you will, an economic recession that the Fed can't print us out of initially, then I think people start saying, okay, well, stocks keep making a little less money, so earnings are going down, therefore valuations have to keep coming down. Where do we go? And if you can get regulation and it makes sense, and if Bitcoin is spared a lot of that regulation, then I do think once there's clarity in crypto, then you start to see money flowing into Bitcoin as a safe haven, and that should happen in 2024. The thing is, it's the near-term pain of going through a really bad depression, or it's just print more money to kind of push it off till another day. And we all know it's unsustainable, but that's what our government has done, and that's what the Federal Reserve has done. The Fed always tends to err on the side of what politically is, even though they're not supposed to be political, they err on the side of less pain now versus, who knows in 20 years if we go into a depression because our currency collapses at that point, we'll deal with it then type thing. And again, as someone who's not super old, makes me a little nervous, especially for my kids. But yeah, it is what it is. And our job is not to dictate their policy. It's to make sure that we prepare ourselves by trading and buying certain things like Bitcoin. So I think we are in the beginning stages of a bear market in housing, automobiles. I think the same thing. I think overall, people loved having extra money during COVID. They bought a new car. You're coming out of that now, and that's going to be problematic. So I think used cars prices are going to continue to decline sharply, and even new auto sales will decline pretty precipitously too. Everyone always wants to be fully invested, but the reason to have some cash on the sidelines is that when you get opportunities, you can jump on them. And I do think that the next 12 to 18, maybe 24 months, there are going to be amazing opportunities out there for investors that have cash on the sidelines. So I think that's really important to remember.